Let's also invite on board Sandip Sabharwal, who's joining in. And Sandip, let's get stock specific then and get in your take on the entire chemical sector. Brokerages of the view that's still not out of the woods. In fact, they've cut the target price of most of the companies like SRF, Tata Chemicals, Navin Fluorine. What's your outlook?
So on the chemical side, there's still huge overcapacity. Largely, prices are under pressure. So obviously, when prices fall a lot, there is some upswing. But given the huge oversupply position and the demand supply mismatch, and the fact that many of these companies have added significant capacity over the last 1 or 2 years and are in the process of adding more capacity. So what this will do is that this will create diseconomies of scale. So because of huge capex and low prices, and as the plants become commercialized, you'll have interest costs, etc., also coming into your P&L. So it's going to be a tough phase. So first, we'll have to see a price revival stage, then a restocking stage from destocking which was on. So it'll be long drawn, at least 12 to 18 months for at least that much time.
Morning, Sandeep. Sandeep, I want to understand your thoughts on Indigo. What has happened recently, the most, the development which caught everybody's attention was they've started flying overseas, and they've shared a massive strategy of how aiming at overseas market share from some of the foreign carriers. Do they have a good chance in your view? Just today, Kotak has upped the price target to almost 6,000 now, saying that most of their competitors will continue to face stiff losses in 25, at least 15-month period, and in this time they can scale up their game. Stock is already at 4,300. What are your thoughts?
Yes, so the situation was never as good in the Indian aviation market as it is today because there are effectively only two large players, Vistara Air India combined and Interglobe Aviation. Interglobe commands more than 60% market share today. So the pricing power, the overall way in which they can operate is in their hands. They also announced a business class foray now, which could be value accretive and change perception of many people on flying interglobe aviation, and especially on international routes. The business class foray actually might help them gain market share. So I think they are in sort of a Goldilocks position today, and there's no reason to be negative. So we have held the stock for a long time and should continue to hold for the long time also.
Okay, it's in the long-term portfolio, Interglobe Aviation that is. But Sandeep, stay with us and we want to comment on this one as well. Bajaj Finance's arm, Bajaj Housing Finance, has now approved an IPO that involves a fundraise of 4,000 crore rupees via fresh issue and an offer for sale component separately as well. In fact, Snehi from our research desk joins in to just break down the news for us.
Well, yes, so Bajaj Finance is going to be a stock to watch out for today because its wholly owned subsidiary, Bajaj Housing Finance, has announced its IPO. A little bit about this IPO, the issue comprises a fresh issue of 4,000 crores and also has an offer for sale component, and the face value is at 10 rupees per share. Now, according to RBI's upper layer NBFC scale-based regulations, Bajaj Housing Finance will have to list on the exchanges latest by September 2025, and if reports are to be believed, the company has already initiated preliminary talks with a whole bunch of investment banks about this upcoming IPO. The IPO is said to be valued anywhere between $9 and $10 billion, and valuations imply roughly 26 times FY26 price to earnings at a $9.5 billion valuation for the housing finance subsidiary, assuming it forms 28% of the parent's overall AUM. A little bit about the company. It was established in September 2015, began its operations in July of 2017. It's a non-deposit taking housing finance company, also registered with the National Housing Bank, and focus is mainly on retail and individual housing. Now, out of all the services it provides, home loans makes up 56% of that pie, followed by lease rental discounting, developer financing, loan against property, and they also have a specialized vertical catering to rural as well as MSME customers. Now, when you compare it with already listed peers, LIC Housing Finance has an AUM of 2.86 lakh crores and Bajaj Housing's AUM comes in at 91,370 crore rupees. On the price to book basis, while all other peers have price to books anywhere between 1 and 3 times, for FY25, brokerages are valuing Bajaj Housing Finance price to book at 6 times. So that is a large jump coming in compared to all other listed peers. And average FY24 to FY26 return on assets are also at 2.7%, but that is largely in line with what other peers are also delivering as well. But well, yes, price to book for FY25 is at 6 times, and that's an important metric to watch out for. But yes, the DRHP of this IPO is also going to be filed soon with the exchanges. This is what we are learning.
Actually, the essence is that Street is till now assigning a massive premium. Sandeep, this housing finance is a commodity kind of a business. Some people do it much more with higher efficiency. Yes, they do get a little bit of premium. But look at the space. I mean, there are so many of them, almost a dozen of housing finance companies. And in the last 1 or 2 years, Bajaj Finance, the parent itself, has gotten, the valuations have actually shrunk on a variety of reasons. Do you think Bajaj Finance housing can actually garner premium valuations versus the sector just the same way as Bajaj did at some point in time, or that will be challenging?
Ideally, they should not be able to, because like you rightly said, it's more commoditized. In fact, you look at the reason why did HDFC merge into HDFC Bank? Because they realized that the margins are going to get squeezed. And if they don't have a low cost deposit franchise which supports the margin squeeze, then it will become tougher. So many of these housing finance companies sustain higher margins through developer financing, loan against property, etc., which are higher margin but then also carry higher risk. So ideally, they should not be able to get such a huge premium. But you know the state of the IPO market. Any IPO gets just lapped up crazily irrespective of valuation. So let's see how that goes.
Okay, so Bajaj Housing is one. In fact, Aadhar Housing got good response, especially after I think Mr. Bhansali's name came up in the block deal purchases. Awas, there's a lot of stuff happening there. That's the low cost of the affordable housing finance section of the market. The other stock to talk is, of course, Mankind Pharma. Pull up Mankind Pharma. Do we have the management commentary which we recently?
We do.
Okay. Mankind Pharma, what happened, Sandeep, recently we probed the management intensely about their acquisition plans. And they did mention that they have a lot of cash on the books, especially after the latest block deal. And domestic growth is what they want to chase, because that's what has benefited the company so far in numbers as well as in valuations. And now some, ET is reporting a buyout, maybe close BSP Group. What are your thoughts on domestic pharma and Mankind in particular?
Domestic pharma grows at a steady rate. So it'll never grow at 15-20%. It'll never fall below 5 to 8%. So I think that's the range in which they grow. So Mankind has done exceptionally well actually in terms of their growth as well as profitability margins, and that's why the premium valuation sustained. However, I think a very large M&A deal could strain valuations in the short term. So I think although acquisitions, etc., look positive on the face of it, but large scale acquisitions have a lot of integration issues also involved with them. And we've seen traditionally that companies usually take a longer time than what they planned for the entire integration to happen. So I think we should be somewhat careful in assessing any large scale acquisition.
Right. Yeah, exactly. That's the opinion on, Mankind Pharma. The other space which was very buoyant yesterday was also the entire PSU pack, be it a BHEL with that sizable order win that they had, and, part of which was from Adani Power, or for that matter, HAL. REC jumped up about almost 6.6%. Sandeep, do you believe all that, fear and panic around PSUs was kind of overdone?
So the fear was overdone in the sense that nothing fundamentally changes. But the fact doesn't change that most of the PSUs are at least 50 to 100% overvalued at this stage. They trade at a significant premium to similar private sector companies which don't possibly have the PSU governance issues. Like there are bureaucratic governance issues which you cannot ignore. So X of the defense pack, where the visibility for 8 to 10 years also is very clear, and there we could see premium valuation sustain X of them, I think people need to be wary that the valuations of these PSUs across the board are very, very high.